Hey guys, Sam calling in from a lovely sunny Sunday evening here in San Francisco on the West Coast. Going to do a quick recap of last week's action, see some of the big movers, and try and get a sense of what's going to be happening in the coming weeks and the coming months. So starting off with the S&P, we can see structurally it's still technically intact. It's holding this upward sloping line. It hasn't come back under this resistance line which it broke out at the start of May, and it closed the week right back up at this resistance line here. So despite breaking out of this kind of very tight range it's been in for 2 or 3 weeks, on Tuesday after Memorial Weekend, the dip was bought. We had a strong close on Wednesday, a little bit of weakness on Thursday, and then a very strong finish on Friday. So Tuesday was mostly about Eurozone concerns, and there's a Eurosceptic government after getting into power post-elections in Italy. It's like the Eurozone's third biggest economy, and fears are now popping up, just like with Greece back in 2011 and 2015, the debt obligations. So the government isn't a fan of the Eurozone, it's not a fan of Europe. Are they going to be meeting them? Are they going to be as trustworthy for investors? So Italian bonds got absolutely destroyed on Tuesday. Contagion fear spilled over into the US market. Financials were very weak. In fact, things got so kind of shaky on Tuesday that the rate hike odds for 2018 dropped. This in turn had the kind of the cat and mouse effect of chasing the stocks and the market up on Wednesday. Really strong action. It was like a 2% move from the low here up to Wednesday's close. Trump came out with some trade war comments with Mexico, Canada, and the EU on Thursday, but then a strong finish with the non-farms reports, unemployment's at an all-time low, and a strong bullish close on Friday, right back up at resistance levels. So going into next week, what we're really looking to see is a kind of a move past this 2750 level. And we want to start seeing the 2800 level come into play. So these are the two tops that were put in last March. We want to get up here again, take it nice and handy, a little bit of consolidation, similar to what we've seen post the breakout of this trend here. Let's see a repeat of that up here before we move up towards the highs set back in Jan. And here's the FTSE MIB. So this is the Italian index, just like the American S&P, and we can see the damage that's been done in the last couple of weeks, the last 2 or 3 weeks, with this volatility kicking off in the bond market. So about 14% wiped off in maybe 2 weeks. Now we're seeing a bit of a bounce, not to be unexpected, particularly with something like the RSI coming down towards the low 20s as we saw. So a bounce is always likely in those situations. However, this isn't something you want to be getting long when there's such a strong fundamental case against it right now. No reason why the can won't be kicked down the road again, just like it has been in the past with the Eurozone countries, the pigs, the Portugals, the Irelands, the Greeces, the Spains. So no reason it won't be kicked down the road again. However, history shows, the markets show that there is a period of volatility that they have to go through before that happens, before the elites, before the governments are forced into action. Moving back towards the American market, keeping an eye on Apple, one of the big tech giants that's been performing really well in recent weeks. They had the great earnings back in May. These two closes were very important. The earnings were held onto, the gains were held onto, and this move then up over the highs that were set back in March, setting us up for some good consolidation then pretty much for all of May. And this is the ideal case. This is exactly what we were hoping to see. A more aggressive move up into the highs, up past the 190 level. You're likely going to see some profit taking. You're likely going to see some people afraid to get involved, and that's going to create some weakness. So some sideways consolidation after a big move is always bullish, and all the more so then when it tightens up into a wedge like this, and we have a strong breakout closing at the very high of the day on a Friday. So people, begging to be getting long into the weekend. It's a great stock to be part of, and a really interesting one to watch as we move towards all-time highs in the next couple of weeks. And finally, Tesla. So this is another stock that we've been keeping on the radar. It's had a pretty bad 2018 so far, after a choppy 2017. And we seem to be kind of moving into a potential rain bounce situation just here. If we look at it from April through to today, we have this low that's been put in. We have the level on top on the upper side. So 2 eyes have been put in here. And this is reminding me a lot of what we saw back at the end of last year and the start of Jan and Feb. So the low, the high, the low, the high, just kind of the bouncing around in the range, very repetitive action. And we seem to be setting up again, so the high, the low, the high, the low, the high, and so on. So it looks as if we're going to be setting up for a test of the 310s shortly. No reason why this wouldn't come back down towards the 280 just in the short term, so stay in a range before it makes up its mind to move in one direction or another, just like it did back in at the end of March, and it broke down. So another interesting one to keep an eye on from a technical perspective. Nothing wrong with trying to trade this from a swing point of view, taking your entries down here, working your orders here, maybe keep a few long just in case it does break out to the upside. We're keeping an eye on the MACD, we're just seeing a bullish crossover. Always an interesting technical to be aware of, particularly when a stock is bouncing off support. It can be a very good entry point. That's it, guys. Any questions, any comments, feel free to shoot me an email, leave a comment on the video, and we'll catch up next week. Take care.